The stock that we'll be reviewing today is a giant in the IT sector, and that is Tata Consultancy Services. Now let's just look at it from a macro perspective, firstly, right? Now on the monthly chart, TCS has been in a clear downtrend from a high of around 4,500 and has fallen all the way to 2,582. And if we truly look at every single time that the price has tried to rally, for example, over here or down here, what we notice is that every single time the price has bled through. And this means that there's not been any actual real demand. Now, moving down to the weekly chart, an interesting zone to look out for over here is the 3100 range over here. And the reason for this is previously it used to be a strong support zone. And once it broke, it flipped into a major supply. Now, this will act as a ceiling for us. So it'll be extremely interesting to see how the price, which has recently been growing slowly but steadily in the past few weeks, how it interacts with this support, with this ceiling over here. Let's go down to the daily time frame to understand what a trigger would actually look like. Okay, now after hitting around 2346, price swept liquidity and bounced. Now, price has been slowly grinding higher, forming early signs of a shift. But here's the catch, there's no real confirmation as of yet. The resistance sits somewhere around 2650 over here, all the way to 2700. So what I would be doing is I would be waiting just to see how price reacts over there. Now let's layer in the fundamentals as well. For FY26, TCS reported a revenue of about 2.67 lakh crore rupees, growing 4.6% in rupee terms. But in constant currency, revenue has actually declined, which tells you that growth isn't as strong as it looks. The reason is simple. Global demand slowed down. US and European clients cut IT spending. Projects weren't cancelled, but they were delayed. And that's a big difference. Now, TCS has actually signed deals worth about rupees 3.4 lakh crores in FY26. It shows that long-term demand is still intact, even if short-term revenue is slow. Margins, on the other hand, have interestingly improved. Operating margin as well as the gross profit margin have been increasing. The OPM has actually come out to 27.11, which is the highest in the last 4 years. And the reason for that is largely due to restructuring, that is cutting higher cost employees and hiring fresh talent. And then, very interesting point to look into is the investing activities. The cash flow has the cash outflow has constantly been increasing, and the reason for that is actually because of the improvement of investment in AI and AI infrastructure. TCS is actually generating already 19,000 crore rupees annually from AI related work. And that's not future potential, that's current revenue. And that's what makes this worth for them. Now, if you were simply to go into the trade setup, how I would be looking at it is I would be looking at this 2,700 range. I'd want the price to push through it, fall back, and actually retest the zone. So firstly, I'd create a GTT, a single price order for a buy at 2,700. Quantity of 100, and I'd want the price to be at 2,700 again. What I want to buy it at. Great. Now I'll create the GTT. Now the stop loss. Right. Simple. I'd actually create a GTT. I'd keep it in the cell. Good in one cancels the other way. And so the stop loss, I'd set it somewhere around 2040, 2400, sorry, 2400, right? And 2400 over here as well. And this is because it sits little below the major demand zone, right? So 100 over here as well. So that would give us somewhere around a 300 price range. Now, in order to execute a 1:3 risk reward ratio, I'd actually be looking at around 3,600 being my target range. So 3,600, 3,600, yeah, great. And again, 100. And like just like that, I'd create my GTT. So now my stop loss has been created as well as my target. And that is how I would create TCS. Thank you.